Assalamualaikum and hi, my name is Nur Naziha and I will explain about Mfrs 8. Mfrs 8 operating segment is a Malaysian accounting standard that requires entities, particularly public listed companies, to report financial information based on how management internally organize and evaluate business performance. An operating segment is a component of an entity that earns revenue or incurs expenses, including inter-segment transactions, whose operating results are regularly reviewed by the Chief Operating Decision Maker (CODM), and for which discrete financial information is available. Any segment exceeding the 10% quantitative threshold, revenue, profit or loss, or asset is reportable. Operating segment may be combined if they have similar economic characteristics, such as similar product and service, geographical areas, or regulatory environment. If reputable segment contribute less than 75% of total external revenue, additional segment must be identified until the 75% threshold is met. Next, what or who is CODM? CODM is Chief Operating Decision Maker, refers to a function rather than a specific job title. It is the person or group responsible for allocating resources to operating segment and assessing their performance. In most entities, the CODM is usually the highest level of management, such as the CEO, COO, senior management team, or the board of directors. However, the identification of the CODM depends on the entity management structure and may require judgment. The title of the person is not relevant as long as the individual or group is responsible for making strategic decisions regarding the entity's operating segment. Next is example of CODM. The first one is Abdul Aziz Othman as Managing Director or Chief Executive Officer of company Petronas Gas Berhad. For company capital A Berhad, there are several CODM in the company such as Tan Sri Antonio Francis Fernandez as Non-Independent Executive Director and Chief Executive Officer, and Datuk Kamarudin bin Meranon as Non-Independent Executive Director. Next, I will pass to Najla.
Thank you, Naziha. I am Najla. So today I will be explaining the two types of segmental report based on capital A in accordance with Mfrs 8. Segment reporting is important because it provides more detailed information about company performance by breaking it down into smaller components. This helps users of financial statements such as investor and stakeholder to better understand how the company operates and where its revenue comes from. There are two main types of segmental reports, which are operating segment and geographical segment. For operating segment, it refers to the different business activities within a company that generate revenue and incur expenses. In the case of capital A Berhad, the main operating segment include aviation, logistics, engineering, and others. The aviation segment is the core business focusing on airline operations such as passenger flights, related service, and typically contributes the largest portion of revenue. The logistics segment, also known as teleport, focus on cargo delivery and freight service. And lastly, the engineering segment provide aircraft maintenance and technical service. This breakdown helps management make better strategies, decisions, and allocate resources more effectively. Next, geographical segment refer to the classification of revenue based on the location where the company operates or generates its income. For capital A Berhad, revenue is reported by countries such as Malaysia, Philippines, Indonesia, Thailand, and others. This shows how much revenue is contributed by each region. Geographical segment reporting is important because it helps users identify which region contributes the most to the company overall performance. For example, a higher contribution from Malaysia indicates a strong market in the country. Geographical segment also help users understand the impact of external factors such as economic condition, exchange rate, and political environment in different regions. In conclusion, operating segment focus on the nature of business activity, while geographical segment focus on the location of revenue generation. Both types of segment reporting are important as they enhance transparency and provide useful information for better decision making. That's all from me. I will pass to Shakirin. Thank you.
Thank you, Najla. My name is Nur Shakiri. Okay, for this question, I am using capital A Berhad as an example to explain two key benefits of segmental reporting under Mfrs Act. So, basically, segmental reporting helps us understand how a company earns its revenue by breaking it down into different business segments and also different countries. For the first benefit, it helps us identify the main source of revenue. From the segment report, we can see that the aviation segment contributes the highest revenue, which is more than 18 billion ringgit compared to other segments like big pay or engineering. So, this tells us that the company is highly dependent on its aviation business. If anything affects this segment, it will have a big impact on the company's overall performance. Next, for the second benefit, segmental reporting allows us to compare performance across different countries. For example, Thailand shows a strong increase in revenue, while the Philippines shows a slight decline. So, from here, users can see which markets are growing and which ones are slowing down, and this helps in making better decisions and assessing risk. In conclusion, segmental reporting gives a clearer picture of where the company's revenue comes from and how it performs in different markets.
What is MFRS 134? It is a Malaysian financial reporting accounting standard of interim financial reporting that provide guidance on how a company should prepare and present their financial statement. The objective is to ensure investor and others users with more timely or current information. In accordance with MFRS 134 interim financial reporting, entities with publicly traded debt or equity securities are required to publish interim financial report as mandated by Bursa Malaysia. Interim period is a financial reporting period shortened than a fully financial year. Interim financial report means a financial report containing either a complete set of financial statement as described in MFRS 101 presentation of financial statement or a set of condensed financial statement as described in this standard for an interim period. Can be issued semi-annually, quarterly or bi-monthly. MFRS 134 prescribes the minimum content including disclosure and identify the recognition and measurement principle that should be applied in interim financial report. Next, I will pass to Diana.
Thank you, Naziha. My name is Diana. Today I will be presenting Part B, Question 2, which focus on significant event and transaction under MFRS 134. Our selected company is Capital A Berhad, and we will be analyzing its interim financial report for the year 2025. Significantly, we will identify two major events that significantly affect the company financial performance and financial position during the interim period. The first significant event is the disposal of Capital A Aviation business, including A Asia Aviation Group and A Asia Berhad to A Asia X. As shown in this snippet, the disposal involved a large transaction value and resulted in Capital A exiting its aviation segment. This event has a major impact on financial performance as the company recorded a gain on disposal of total 9.7 billion ringgit, which significantly increased profit during the interim period. In terms of financial position, this transaction also reduced liability and improved the overall financial structure of the company. The second significant transaction is the issuance of new shares to the conversion of RCU IDS and warrants. Based on the interim report, the company issued total 99.7 million new shares with a total value of 50.9 million ringgit. This transaction improved the company financial position by increasing equity and strengthening its capital base. Although it does not directly affect profit, it supports the company's long-term financial and growth. In conclusion, this event clearly shows how significant transaction during the interim period can materially affect both the financial performance and financial position of the company. So thank you. I will pass it to the next presenter.
Thank you, Diana. Next, my name is Nur Najiha. I would like to present for Part B, Question 3. We selected Petronas Gas Berhad and referred to its quarterly report for the year ended 31st December 2035. Based on the interim financial report, the company present condensed and consolidated financial statement in accordance with MFRS 134. For the current interim period, the statement of profit or loss, statement of changes in equity, and statement of cash flow are presented for the quarter ended 31st December 2025 and also for the cumulative year-to-date period ended 31st December 2025. Meanwhile, the statement of financial position is presented as at 31st December 2025. For comparative purpose, the company also present the corresponding quarter ended 31st December 2034 and the year-to-date period ended 31st December 2024. This presentation complies with MFRS 134, which requires entities to disclose both current and comparative interim reporting period to ensure consistency and comparability. Under MFRS 134, entities are required to present a complete set of condensed interim financial statement. Based on the quarterly report, the following four statements are disclosed. First, the condensed statement of profit or loss shows the company financial performance for the quarter and year-to-date period ended 31st December 2035, together with comparative figures for 2024. Next, the statement of financial position presents the company assets, liability, and equity as at 31st December 2025, with comparative information as at 31st December 2024. The statement of changes in equity explains the movement in shareholder equity during the interim period. Lastly, the statement of cash flow reports the cash inflow and outflow for the year-to-date period. All statements are presented in condensed form in accordance with MFRS 134.
I just had to let you know you're